Thursday, November 21st, 2019, Maneco 64, home of alternative economics and contrarian views. So today I want to talk about the men who predicted the 1929 stock market crash. I'm going to reference this book here, Lords of Finance, for that. We always hear about Irving Fisher, who was a famous economist at the time, who said, to paraphrase him, said that stocks would remain elevated for a very, very long time, just before they crashed, right? But before I go into that and look at the markets briefly, I want to let the public know that there's a new advocacy group out there, and this is especially for people in Canada. I've got a lot of viewers in Canada for my channel, and it's a coalition called Canadian Coalition for Gold Reserves. So you can see here they're on Twitter. I recommend, if you feel strongly about this like they do, that you follow them on Twitter. They have a website as well, coalitiongold.ca. So what are they up to? Well, it says, we are an advocacy group seeking to restore Canada gold reserves to its previous status to protect the economic prosperity of all Canadians. So Canada has zero gold reserves as a sovereign entity. Some people say, well, it doesn't matter because Canada has got a lot of gold under the ground, a lot of mining companies. Well, I don't think that really, how can I say, is an excuse. Because Canada, going back to 1965, had over 1,000 tons of gold. It actually had 1,151 here, as you can see, from Canada gold reserves. Right now, as you can see, it's zero. So just wanted to put the word out for them. I appreciate all the support for my channel. Sometimes you need to try to help out people who help you, right, by watching your videos. So there you go. Make sure you, even if you're not in Canada, I think that's important for people all around the world. Follow Canadian Coalition for Gold Reserves. Have a look at their website. Follow them on Twitter. So yeah, who was the guy who actually predicted the stock market crash? Well, he's a guy by the name of Roger Babson. The man who actually founded Babson College. Some of you might know about Babson College. It's quite a famous college. Yesterday I wanted to try to find some stuff about the BIS in this book that I read quite a few years ago, Lords of Finance. I recommend it. And then there was a section in the book on chapter 17, Purging the Rottenness. 1929 to 1930, right? So it's all about the run-up to the stock market crash of 1929. And I came to a section here, started reading, and I'll read it to you, right? At 2 o'clock on the afternoon of September 5th, the Newswire reported that the Massachusetts economist and statistician Roger Babson had announced at his annual National Business Conference in Wellesley, Massachusetts, and they quote him. So it says, I repeat what I said at this time last year and the year before, that sooner or later a crash is coming, and it may be terrific. The Federal Reserve System has put banks in a strong position, but it has not changed human nature. Observing further that a detailed study of the market shows that the group of advancing stocks is continually becoming narrower and smaller. He predicted that the Dow would probably drop 60 to 80 points, 15 to 20%, and the factories will shut down, men will be thrown out of work, the vicious circle will get in full swing, and the result will be a serious business depression. That afternoon, the Dow fell 10 points, roughly 3%. So, and this is the interesting part here, because we all know quite a bit about Irving Fisher, right? But I'd never heard about Babson. And I guess when I read this book, yeah, I read about him, but it never stayed in my mind. But Irving Fisher, we always hear about him. So this is what they say here further along the chapter. After Babson's gloomy forecast, the New York Times sought a rejoinder from Irving Fisher, professor of economics at Yale and the most prominent economist of the time. Prefacing his remarks with the concession that none of us are infallible, Professor Fisher declared, stock prices are not too high and Wall Street will not experience anything in the nature of a crash. A noted student of the market, he based his assessment on the assumption that the future would be much like the recent past, that profits would continue to grow over 10% as they had done in over the previous 5 years. It was an example of the pitfalls of placing too much faith in the ability of mathematicians with their flawed models to beat the market. So there you go. Of course, the market would crash spectacularly later on October 29th, Black Tuesday. The interesting about Black Tuesday as well is that the market dropped as much as 80 points intraday and actually rallied 40 points at the close. So all these rallies we see nowadays, a lot of times at the close, is not something new, right? With that, I was interested in Roger Babson, so I looked him up on Wikipedia, and I found that he has 10 Commandments of Investing. It's called Babson's 10 Commandments of Investing. I never heard of it. So I'll go through them. 1, keep speculation and investments separate. Very interesting. People might argue, what's the difference? Well, speculation is when you leverage. Investment, he means more longer term as well. 2, don't be fooled by a name. 3, be wary of new promotions. 4, give due consideration to market ability. 5, don't buy without proper facts. Do your homework, right? 6, safeguard purchases through diversification. Reasonable enough. 7, don't try to diversify by buying different securities of the same company. What does that mean? Well, you buy stock in Apple and then you buy preferred shares in Apple. That's not diversifying, right? That's what he means. 8, small companies should be carefully scrutinized. 9, buy adequate security, not superabundance. 10, this is the one that I think is really interesting. And this is probably why very few people ever heard about these commandments because I don't think it's something Wall Street would want to publicize, because this is what gives them their edge, right? Choose your dealer and buy outright. Don't buy on margin. So there you go. That's the root of all the problems in the markets, in my opinion, and it starts through the fractional reserve mechanism, right? What's the fractional reserve? Well, that's the mechanism that banks have been using for ages, for decades and upon decades, right? So what is fractional reserve? Well, I'll give you a simple example. Let's say a bank opens up, right? New bank, and you're the first depositor in that bank. You deposit $1,000 with Acme Bank, and they take that deposit and they lend out $10,000 or pounds to their new customer, another customer. So they lend out $9,000 that they don't have, and that's leverage, that's margin, that's where it starts out in the banking system, and then it goes on to the stock market as well. People buy on margin. What does that mean? Well, they buy $100,000 of worth of Apple stock, but they only need to put down $10,000, right? So if the market starts moving down sharply, your $10,000 could be at risk. Not only that, if the market drops massively, you could be at risk of having to pay even more than $10,000. You might not have that, so you might have to liquidate your stock, and that will cause a cascading effect, right? And it works the other way as well. And that's why you get these massive bubbles, these stock market moves, and I think that's what Babson is talking about. So I found that really interesting. Roger Babson. We don't hear much about him on Wall Street, right? So let's look at the markets this morning. Yesterday was another interesting day in the markets. We've had 2 days in a row where the Dow has dropped 100 points at least. Yesterday we dropped 113. I think it was down over 200 points easily intraday. S&P dropped as well yesterday, same percentage, 0.4% as the Dow, and the NASDAQ dropped 0.5%. So it's 8:16 a.m. London. Right now we've got spot gold 1472.80. That's over just $1. Gold and silver are still not going anywhere. Yesterday, as usual, gold was strong early on European and US time, and as the day went ahead, it came off, which is something that happens many times. Silver right now, it's at 17.10, down 3 cents. Range has been 17.05 to 17.21. The Dow is down another 55 points, so the drop is continuing here. Not a huge drop, but it looks like we've made a top, short-term top here. Down 55 at 27,759, so down 0.2%. It has been down as much as 150 or 120 overnight, so we are off the lows. S&P yesterday traded below 3,100, rallied to close above it. Right now it's testing that level. We're at 3,102, down 6. The low overnight has been 30.91. The NASDAQ 100 future is down 0.25% at 86.20. The currencies, sterling is a little stronger, 129.38, up 0.1. Euro, virtually unchanged, 110.80. The dollar is slightly lower against the Japanese yen at 108.52. And yeah, the dollar has risen a little bit against the Chinese yuan. We're just below 704. Crude oil, fairly steady. We're just below 57 in WTI, down 0.2%, 56.92, and Brent is at 61.64. The bond market. I noticed that the bond market yesterday, we saw the curve flatten. What does that mean? That means longer term yields dropped quite a bit more than the shorter term yields. As you can see here, the 2-year note yield dropped 2 basis points. The 10-year dropped 5. The 30-year dropped 6. The curve, of course, is not inverted anymore. But the fact that it's flattening while the Fed is cutting means that the market is maybe losing confidence in the economy, right? Because in the long term, they see things slowing down, and that's why those yields are coming down. Or is the market trying to force the Fed to cut again on December 11th? We'll have to see what happens in the next few weeks, of course. So there you go. I highly recommend you look at Roger Babson. Interesting character. He founded Babson College, I think, in 1919, and he founded some other colleges down in Florida. Yes, and check out the Canadian Coalition for Gold Reserves, especially if you're a Canadian. I think it's an important subject. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. Make sure you share this video far and wide as well with people you think might enjoy my content. And you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.